Business owners, before an IRS audit letter ever shows up, there may already be things in your records that could create questions later. That does not mean you did something wrong. It means your books, your deductions, payroll records, or income records may need a closer look before someone else is looking at them. I'm Clenney, a CPA in Montgomery, Alabama, and today I want to walk through business audit red flags so you can take a closer look at your records before there is a problem. One of the first areas to review is business income. Your income should make sense across your bank deposits, invoices, payment records, merchant statements, and bookkeeping reports. When money comes into your business, your records should help explain where it came from and how it was reported. Problems can show up when deposits are hard to explain, invoices are missing, cash payments are not tracked well, or bookkeeping does not match what was filed on the tax return. Another area to review is large business deductions. Deductions are a part of running a business, but larger deductions need strong support. Office expenses, travel, meals, equipment, marketing, vehicle use, and professional services should all have records behind them. A report can show what was purchased, but it may not fully explain why the purchase belonged to the business. That is where documentation matters. Mileage is another place where business owners can run into trouble. A mileage deduction should be supported by more than a number on a tax return. Good records usually include dates, destination, miles driven, and business purpose for each trip. Client meetings, job site visits, business errands, and certain work-related travel may count. Regular commuting usually does not. Business meals also need careful records. A bank charge alone may not explain who was there, what was discussed, or why the meal counted as a business expense. If meals are being deducted, your records should help show the business connection. Payroll records are also important. Payroll reports, payroll tax filings, employee records, and payment records should line up. When payroll numbers do not match or payroll tax filings are late or incomplete, questions can come up quickly. Contractor payments can create issues too. Your business should have records showing who was paid, how much they were paid, what work they performed, and whether required forms were handled properly. Mixed personal and business spending is another major one. When personal purchases run through business accounts, it makes your books harder to understand. It can also make deductions harder to support. Clean separation makes your records easier to review and easier to explain. Cash-heavy businesses need extra attention too. Cash income should still be tracked clearly. Sales records, deposit records, receipts, and bookkeeping should work together to show what came in and where it went. The biggest point is this: audit red flags are often record-keeping problems before they become IRS problems. A missing receipt, unclear deposits, unsupported deduction, payroll issues, or bookkeeping gap may seem small at first. During a review, those small issues can create bigger questions. That is why now is a good time to look at your records. My free 30-minute business tax audit review helps business owners review areas that may need stronger documentation, clearer bookkeeping, or closer attention before IRS questions come up. Click the link below to schedule your free 30-minute business tax audit review today.